Hello guys, welcome to my first video on the channel. My name is the Liquidity Hub. In this video, I'm going to be teaching you a very simple three-step strategy based off of liquidity candles. Now, before we do get into that, I'm just going to tell you a little bit about myself. If you are new to my either Instagram page, Telegram, Twitter, or obviously to my YouTube. So like I said, my name is the Liquidity Hub. I've been trading now for 4 years, and for the past 2 years, I've been focusing heavily on liquidity concepts. Um, as of now, I trade one 1 million pounds in investor capital. I've acquired this through networking and through providing a track record for business owners in my local area. I have been previously funded, but that was when I was trading smart money concepts, and I did end up losing that after gathering a little bit of personal capital. So with all that said and done, if you do find this video interesting, then please do give this video a like. And if you haven't already, hit that subscribe button. If you are interested at all in any of the services I run, whether that is signals or mentorship, then please let me know. You can either write to me in the comment section, or you can find the links to my social medias in the description. And now let's get into the strategy. So the main component that you are going to need for this strategy is this indicator right here. Okay, and this is basically just highlighting the liquidity candles on the chart. Now, if you want access to this liquidity candle indicator, then you can find the code to it either in the comment section or in the description. So how do you actually apply it? So you just make sure the whole Pine script is clear, and then you copy the indicator into it, copy the code into it, and then you press save it, and then you press update on chart, and then you should see these white candles appear. Now, what exactly are these white candles? Well, we know that when we are taught to trade to start with, a lot of people will be looking to trade these types of candles. Okay, so they'll be looking to trade either a doji candle or a pin bar candle. Okay, whether that is bullish or, a bearish pin bar. So if a lot of new traders are trading this, then the likelihood is, because of the statistic, around about 99.9% of traders fail, then there is going to be stop losses above and stop losses below. So if we now have a look on the chart, okay, you can see even just here, even when we are in a heavy bearish downtrend, price comes, takes out this liquidity candle, it has a reaction. Price comes, takes out this liquidity candle, it has a reaction. Here has a reaction. Okay, so the first step on this strategy is one, price must print a H4 liquidity candle. I like to call them LCs, liquidity candle. Some people like to call them LQCs. For me, it's just an LC. Okay. Now the second step, number 2, price must liquidate the high / low of the LC. Okay, so say for example we are looking to trade away from this liquidity candle. Okay, say for example we didn't have any of this price action. Okay, say for example price was coming, we identified that we have a liquidity candle here. We would then need to see price come down and take out this liquidity candle. Now you can see here we have quite a few liquidity candles here. Now the ones I'm focusing on are either on a high or a low. Yeah, MacBook shut down as it ran out of battery, so we'll quickly just go over what I was talking about again. So when it comes to a liquidity candle, I'm looking for one which is either a low or a high. So if we look up at the open, high, low, close values here, you can see the one to the left here. The high of that was 8.9, and then the high of this was 9.9. So this here is higher than the one to the left and also the one to the right. Yet again down here, if we look at the open, high, low, close values, you can see that this candle here is lower at 2.8 than 1.3 and 7.3. So I'm focused more on the ones which are on highs and lows. So this one here, I wouldn't be too focused on. However, this one here, I would be. So when we come down into it, we must liquidate the low, like so. Now that price has liquidated the low, we can actually go down to a lower time frame. So the time frame I'm going to go down to is the 15-minute. We then must get a QM on the 15-minute. So a QM, all the QM is when we take out a low. So we create a low or a high, like so. We take that out and then we close above the high here. Okay, so we take out that low there and then we close above the high. And if it was a bullish example, sorry, if it was a bearish example, we would then be taking out the high and closing below the low. Okay. So price does this here. Okay. So we take out the low. And we take out the high. Now what are we looking for next? Well, we're looking for price to come and take out a liquidity candle within this leg. Okay. Now here we have a liquidity candle and we also have a liquidity candle down here. But notice how this one here isn't on a point and this one here is a low of this. So if we took this out, this would actually invalidate it. So now if we fast forward, let's see what price does. It ends up taking it all out. So we are still looking for longs from this zone. However, we need to look elsewhere. Okay. I've gone a little bit too quick there. But you can see here that we have then had another QM. We've taken a low out here and we've taken out this high. Now within this leg, do we have any liquidity candles which are on a point? Yes, we do. We have one here. So we would be looking at that liquidity candle to then go long from. Okay, so we need to first see this liquidity candle get liquidated. So we'll add this to the list. For we then must get a 15 MLC liquid. There you go. So once price liquidates this, we're simply then heading down to the 1 minute. Okay, and this is your final time frame. And from there, we're looking for a liquidity candle plus engulfing. and we would simply enter on the liquidity candle, okay, after the engulfing has been printed. Now a safe stop for this is a 3 pip to 5 pip stop loss. And now where are we targeting? So if we go back up to the H4, our first target would be a nice 5 risk to reward, and then our final target would be up here at this next liquidity candle. Okay, now let's see what happens. Okay, so unfortunately that does get hit on stop loss. However, the idea is still right. So you can see here, when we get stopped out, we then also print another entry. So for me, I'd be very happy to take that. And yet again, using anywhere from a 3 pip stop loss, like so, to a 5 pip stop loss. And the same rules apply. So we would be targeting 5R first. Like so. And then up here. Now as you can see, price starts to make its way off. We get a very, very nice push up. I believe right here we would have hit 5R. Yes, so once you've hit 5R, you are looking to go break even. And then from there, you basically wait for price to either hit your break even, or you wait for price to come and hit TP. So in this case here, we would have hit break even on the rest of that. Now maybe you would have looked to take out off some partials here at this high, or you could have even just take a full TP at 5R. That's totally up to you. But just to go over the rules again, if I just update it with the entry. Sorry about that. So TP1 and BE at 5R, and then TP2 at the next H4 liquidity candle. Hopefully this has made a lot of sense. If you've got any questions on this strategy, be sure to leave it below in the comment section, and I will be doing quite a few breakdowns based off of this strategy on this channel, so be sure to subscribe. If you would like to learn a little bit more about LIT or MSNR, which is another technique that I use to trade alongside LIT, then please be sure to give me a DM on Instagram, or if you would like access to my signals, then also please give me a DM on Instagram. Other than that, hope you guys have an amazing day, and I will see you later.